Welcome back to One Click Away, part 2 of A Beginner's Guide to Investing, coming up now. So where were we? Oh yeah, when should you start investing? You should start immediately, if your money situation allows you to. But before you start, it's really important that you create some ground rules for yourself. Firstly, I would recommend that you pay off any high interest debts that you might have. Second, I recommend that you start only investing 10 to 20% of your monthly income at a time. Third is to be consistent. Invest money continuously throughout your lifetime and don't stop unless absolutely necessary. This allows you to continually grow your investment account and take full advantage of all that awesome compounding interest. Alright, so now the big question, the one that you've all been waiting for. How do I get started investing? There are several ways to get started, even if you're just starting with a minimal amount of money. First, let me start off by saying, if you do nothing else in terms of investing, I highly recommend that you at least open and begin contributing as much as you can to an IRA. IRA stands for Investment Retirement Account. According to Fidelity.com, many financial experts estimate that you may need up to 85% of your pre-retirement income in order to retire. An employer-sponsored savings plan such as a 401k might not be enough to accumulate the savings that you need. Fortunately, you can contribute to both a 401k and an IRA. An IRA can help you supplement your current savings for retirement, gain access to a wide range of investment choices, and take advantage of potential tax-deferred or tax-free growth. The money that you contribute grows in value over time. This is because you have the ability to choose what investment funds that the money in your IRA grows with, and each of those investment funds that you can choose to invest your money in has its roots in the stock market. Now, each fund is different, and they're comprised of a different mix of stocks or tiny slivers of stocks, and each one is created to give people different choices for what they want to have their money be invested in. So if you open an IRA today with $1,000, you can choose to invest your money into an investment fund that, for example, tracks the S&P 500. What the S&P 500 is it's comprised of the 500 top performing companies in the United States stock market. All right, if you were to invest that $1,000 in this fund, your money would grow or shrink based on how good or bad the average of all the 500 companies in the S&P 500 do over time. According to Investopedia, the S&P 500 historically has an annual average percentage yield of about 10% per year. So based on this information, after 1 year, your initial $1,000 investment could be worth 10% or more, or approximately $1,100. So after the completion of your next year, that $1,100 could be worth 10% more, or about $1,210. Now it's going to continue growing on an average of 10% per year until you withdraw your money, ideally at retirement age. All right, IRAs take advantage of compounding interest, as I explained earlier. All right, so there's two different types of IRAs that you need to be familiar with. The two types of IRAs are traditional IRAs and Roth IRAs. The basic difference between the two is really when you want to pay taxes on your contributions into that IRA. Uncle Sam always needs his cut. So according to Fidelity.com, with a Roth IRA, you make contributions with money you've already paid taxes on. This is also called after-tax money, and your money may potentially grow tax-free with tax-free withdrawals in retirement. Now with the traditional IRA, you make contributions with money you may be able to deduct on your tax return, and any earnings can potentially grow tax-deferred until you withdraw them in retirement. Many retirees find themselves in a lower tax bracket than they were in pre-retirement, so the tax deferral means that the money may be taxed at a lower rate. The one you choose depends on your own personal financial situation or your potential financial situation in the future. If you're a young adult just getting started, I personally recommend opening a Roth IRA as soon as possible and contributing as much as you can and start doing it as soon and consistently as you can. I recommend not exceeding 20% of your total income when doing so. Remember, after you open your IRA and put in your first contributions, select an investment fund or funds for your contribution to invest in. Otherwise, it might just sit there stagnant and not do anything for you. I'm going to leave a link to an IRA calculator in the description so you can try and figure out what type of IRA works for you. Alright, the second way I recommend to beginner investors is to open up a free individual brokerage account to start investing in the stock market by buying individual stocks, or better yet, buying shares of ETFs. An individual brokerage account is just an account that enables you to buy and sell shares of stocks on the stock market. I mean, there are a lot of quality free brokerages that you can use to get started investing with. Some of the ones I recommend are Robinhood, Webull, Fidelity, Vanguard, and Charles Schwab. Now, there are plenty of others that are great in their own ways and offer more tools for traders, but they also might be more confusing for beginner investors, or they might cost you fees to keep up or get going. For the newest traders, I recommend signing up for a free Robinhood account. It's free, simple, easy, user-friendly. Its interface is second to none for beginner traders and comes with enough simple tools to start off. You can sign up for a free Robinhood account by clicking the link in my description, and when you do, Robinhood is going to gift you a free stock with a value of up to $200. It's hard to say no to free money. Now, when you do sign up for a free Robinhood account, or whatever individual investment brokerage account that you do, I recommend that you invest into a large ETF. ETF stands for an exchange traded fund. So investing in an ETF is much safer than investing in individual stocks. This is because an ETF is made up of a bunch of different stocks. Now, the share price of an individual ETF share, it fluctuates based on how the average of all the stocks in that fund perform. All right, this is a much safer investment option than investing in individual stocks or individual companies, where the share price of that company's stock is solely dependent on how that one company performs. So if that one company doesn't do very well or goes out of business tomorrow, your entire investment could be lost. Conversely, if one of the companies inside the ETF goes out of business, the other companies in the ETF will likely maintain that share price. Now, there's a huge number of ETFs out there. The ticker VOO or SPY are two extremely large ETFs that track or follow the S&P 500. So for a beginner investor, I recommend researching and investing into one of these two funds. There are also huge funds that track the entirety of the US stock market, international markets, and more. There's ETFs for everything that you can think of. There's one for robotics. There's ones for healthcare ETFs. There's ones for cannabis ETFs, gold and silver ETFs, almost literally anything that you can think of, there's an ETF for. All right, there's never been a better time to get started investing in the stock market. Now, this is because brokerages have begun allowing investors to purchase fractional shares of a stock or an ETF for free. So a fractional share is just a partial share of a whole share of a stock. So that means with some brokerages, such as Robinhood, you can purchase as little as $1 worth of a share of a company. This allows the investor to have as much or as little exposure to a stock or a fund that they want. Now remember, with all investments, there are risks and rewards and pros and cons. Remember to consult with a qualified, licensed, or accredited financial advisor before you make any important financial decisions. Alright, anyways guys, thanks for watching. If you learned something or you liked what you saw here today, do me a solid and slap that like button. Subscribe and hit that notification bell to get notified of the latest and greatest videos. Remember that you may only be one click away from learning something new that can change your life for the better. Hey guys, I'm Mike Wilcoxon, and this has been One Click Away. Thanks for stopping by. Until next time.